Assalamualaikum warahmatullahi wabarakatuh. To my lecturer, Madam Dr. Nurmaizatul Akmal binti Saidi. We are from Group 5 and today we will going present about my case study 2. This is my group members. Consists of Nurul Sharmimi binti Amarain, Iza Inshirah binti Zaidi, Nur Alia Natasha binti Muhammad Fauzi, Nur Aina Atirah binti Azli, Siti Nurul Hazirah binti Shaziman, Muhammad Farizal Azani bin Ramli, and the last one is Muhammad Aiman Adili bin Ayub.
First of all, we start from abstract. Accounting is a systematic and comprehensive financial transaction which is related to the field of business, and this accounting will also refer to the way a person performs the process of analyzing data and reporting all transactions that occur in the business to superiors, so that superiors will be able to see. Accounting is also a service that plays an important role because it provides information on financial transactions that occur to various stakeholders that will certainly be able to be used in economic decision making.
We go to introduction part. Accounting is the language of business. The American Accounting Association defines accounting as the process of identifying, measuring, and communicating economic information to permit informed judgment and decisions by the user of the information. Accounting refers to the systematic and detailed recording of financial transactions of a business. Accounting is a process of recording, classifying, summarizing, interpreting their effects on the affairs of a company and reporting business transactions. There are many types, from accounting for small business, government, forensic, and management accounting to accounting for corporations. Next, the objective of the study is know the definition accounting, prepare a full set of accounts, manage and maintaining a complete and systematic record of all transactions, and the last one is analyzing the financial position of a business. Why accounting is important? First of all, accounting plays a vital role in running a business because it helps you track income and expenditures, ensure statutory compliance, and provide investors, management, and government with quantitative financial information which can be used in making business decisions. Second, control day-to-day activities of the entity to achieve short-term and long-term planning. And the third is decision making. We use information to make the best decision about the entity activities to ensure that the planning is achieved, whether to increase or decrease the number of employees, add more branches, buy or sell assets, increase or decrease advertising costs, or end the sale of unprofitable goods.
Next, we have to prepare the account. The first one is journal entries. Okay, so this is the journal entries for case study 2. The necessary components if you want to make a journal are the dates, the transaction accounts that involve, the debited amount, and the credited amount. In this journal, I have listed the transaction that take place from 1st October 2020 until 20 October 2020. The next one is ledger. The ledger serves to record business transaction. The amount for both sides of bank account, capital account, and sales accounts are same. The next account is cash account, purchases account, and call account. also have the same amount. For Dash account, purchases return account, sales return account, and Mike's account have the same amount for both sides. The debit and credit amount for drawing account, salary account, furniture account, and stationery account are same. The last one is interest account. The amount of both sides also same.
Trial balance. The purpose of a trial balance is to ensure that all entries made into an organization's general ledger are properly balanced. A trial balance lists the ending balance in each general ledger account. The total amount of the debits and credits in each accounting entry are supposed to match. Therefore, if the debit total and credit total on the trial balance do not match, this indicates that one or more transactions were recorded in the general ledger that were unbalanced. Here, I would like to show the trial balance that we got, which is 150,000 ringgit Malaysia. Next is profit and loss statement. The company are managed to get loss, which is 13,000 ringgit Malaysia. The final part is to prepare the balance sheet statement. To get the amount of working capital, total current asset must be divided with the total current liability. Then, the working capital must be added with the total fixed asset. The amount should be same. Here, I would like to show the balance sheet that we got, which is 64,000 ringgit Malaysia.
That is the usefulness of the statement of profit and loss. Have proof of your business success. Having the profit and loss statement on paper means that you are able to show a chronology record of how well your business has been doing over the course of its operation, allowing you to play your cards right around investor or with buyers if you have the intention of selling the business. If you have your profit and loss statement on hand, you are able to look back on it to review how well your company fared over a chosen period of time. With the result in mind, you will then be able to make better financial decisions as you are armed with concrete knowledge of how your business is doing in terms of revenue and expenses. Provided that the numbers aren't in the red, you will be able to invest money back into your business and make decisions that you would have otherwise required dangerous guesswork. Prepares you to fight tax. If you regularly update your profit and loss statements as well as your other financial statements, you will have all the information you need for sorting out your business tax when the day inevitably arrive. Update financial statements also means that your accounting software is also being regularly updated. The profit and loss account provides information about an enterprise income and expenses which result in net profit or net loss. It helps a businessman to evaluate the performance of an enterprise and provides a basis for forecasting future performance. It also provides valuable information required by a banker while sectioning a loan.
The usefulness of the balance sheet statement. The first one is the balance sheet shows the financial position of a company at a particular point in that time. But the profit and loss statement shows the real strength and earning power of a company over a period of time. Thus, it takes into the account the accounting principle of revenue, recognition, matching, and accuracy, which make it more important and meaningful than the cash flow statement. Next is determines risk and return. A balance sheet sequentially lists your business's assets and liabilities in one place. Current and long-term assets reflect your ability to generate cash and sustain operation. In comparison, short and long-term debts prioritize your business's financial obligation. Ideally, you have more assets on your balance sheet than liabilities, indicating positive net worth. Comparing your current asset to current liabilities determine whether your business can cover its short-term obligation. Other than that it can be used to secure business loans and other capital. The balance sheet allows people outside of your company to quickly understand its financial condition. Most business lenders require a balance sheet to determine how secure the business's financial health has been over time. If the business owner has strong credit history, the business has a strong track record of repaying debts. Next is its provide helpful ration. Rations are often used in analyzing how a company is performing in terms of aspects such as productivity, liquidity, how profitable your business is, and solvency. Last but not least is these financial rations are particularly helpful when assessing how sustainable the business will be long term. They can be determined by a company's balance sheet accounts. For example, your balance sheet is a snapshot that reveals your company's overall capital structure.
First of all, the job scope of accounting is to recording the transaction and provide a financial report. Nonetheless, financials are to do analysis based on the financial report which provided by the company. In addition, accounting professionals is to see how the company is performing and to make sure that the day-to-day accounting is in good operation. For finance, they have to forecast how is the company performance in the future. This information is helpful for the management to review financial trends for further changes, advertising, strategies, marketability, and product information changes. The company is operated by its management and employees with the ultimate goal of making money and to have all members of the company, from employees to shareholders, be affected by the continual positive increases in the company bottom line. In my opinion, accounting and finance both are totally different because based on the proof above, we know that accounting and finance have different skills. This because other companies have other income earned.